Hey traders and investors, it's Serge Berger here. It's no secret that some of these large cap or old tech stocks, as some people refer to them, like Microsoft, Apple, Oracle, some of those things, even Cisco, have had a good run this year so far, and have actually held up quite well here during the past few days of selling. Ex Oracle, at least. So if I look at Microsoft, and it's just really crucial to understand, you can see we're building a really tight technical base. More importantly, however, before we go into that real quick, understand the big picture. And I always say, if you don't understand the big picture, it's really difficult to understand what you're actually trying to look for in a stock. So in terms of Microsoft, and I've discussed this before in one of these videos a couple months back, I think, it's just an incredibly long base that the stock has built here, literally going back to the year 2000 when the stock fell off a cliff as the dot-com bubble burst, or whatever bubble you want to call that back then. So you can see from a technical perspective, we pretty much just early this year in March overcame a major line of resistance, and that is just very simply not bearish. Okay, you can then see this sort of, if you want to call this an inverse or inverted head and shoulders pattern, that's great. You have a right shoulder, left shoulder, sorry, head and a right shoulder. You can look at it that way, but the point is, it's just an incredibly bullish base to work from. What's the upside target on this stock? I don't really know because it's so long, but I'm telling you that shorting the stock through for longer than just a little bit is just very difficult to do here. So the odds just aren't there. So if we now forward back over to the daily chart, and we look at the price action here, you can see we've just been building base after base, and there's just a lot of resiliency in the stock, and I think that's really the key word. You can see just a few weeks ago we broke past the year-to-date highs at that point that were back in April, and we're now just basing. So the stock is scheduled to report earnings on July 22nd, so that's a little bit less than 2 weeks away. From my point of view, because I don't like to buy stocks before an earnings announcement, it's not really my thing to go crazy here. But I think just from a longer-term perspective, it's important to understand that this as well as other stocks in that sort of big old cap, old tech stock kind of type of space, like Apple is there as well. These guys have obviously reinvented themselves. Obviously, Apple reinvented themselves a long time ago now, but it's still an old tech company in that sense. It's been around for a long time, and Microsoft has definitely made a lot of changes. Finally, I think stuff that we're seeing after hundreds of seemingly failed attempts into the mobile space and things like that. I think they're finally starting to get it, and the chart's reflecting that. So really, stop trying to fight the upward trend of Microsoft for more than just the very near term. Stock looks like it's going higher. If you got any questions, as always, you can hit me up on Twitter. My Twitter handle is SteadyTrader, and I'll see you in the next video.